What we thought was just a normal rotation out of some overvalued tech stocks has now turned into a market-wide sell-off after the shocking news out of Europe this morning. In this week's video, we'll cover the news and returns from last week, as well as cover the story out of Europe that spooked the markets, along with what happened with the Fed meeting last week that could keep interest rates the same until 2023.
The U.S. markets have been selling off over the past couple weeks, and now the S&P 500 is at its lowest level in about 6 weeks, after being down just under 2% last week. Now that's surprising because 70% of the S&P 500 companies were actually higher last week, but the top 30% got hit the hardest, which led the S&P lower. The Dow Jones was relatively flat last week, down about 3% for the year still, and the NASDAQ was down 0.5% last week, still up 20% for the year. And we're starting to see some rotation out of the NASDAQ, it looks like, as the NASDAQ's down about 12% from its highs just a few weeks ago. Now, the Russell 2000 was the only US index that had a strong week, up over 2.5%, but still the Russell down about 8% for the year. Now, I also want to mention that as we're shooting this video on Monday morning, there is a market-wide sell-off going on, as the S&P 500 is down about 2.5%. We're getting closer to a long-term support zone on the S&P 500, right around the 3,100 level. And that's also right about where the 200-day moving average is. So we're hoping that we see a bounce here from the S&P 500, but if we don't and we continue to see selling, then it could spell some pain out of the US markets in the future. Foreign and emerging markets were both positive last week, with foreign markets up about 0.5% and emerging markets were up over 1%. And now foreign markets down about 6% for the year, while emerging down about 1%.
There were two major news stories out of Europe over the weekend that shook the markets. The first, out of the UK, was Boris Johnson told his citizens to start preparing for a possible lockdown due to the coronavirus, as the coronavirus numbers continue to spread and increase around Europe. The World Health Organization said it's a very serious situation, and they're expecting countries around Europe to start putting restrictions on public life as soon as this week. Also in the UK, the government top scientists are saying that there could be about 50,000 cases per day in the UK by mid-October if no actions are taken at this time. The second big news story was actually the results of a case that's been being investigated for years from some small business owners in Los Angeles that reported money being taken from their account. And when they questioned the bank about where their funds went, the bank said they didn't really know. So that opened the FinCEN investigation. And those documents from their investigation were released over the weekend. The reports from this investigation revealed that the top 5 banks in Europe have been embezzling and money laundering for decades, to the tune of $2 trillion since 1999. This has obviously decimated the financial sector that has already been hurt this year due to low interest rates and really hasn't rebounded since the 2008 financial crisis. As this investigation continues and more information continues to come out, I'm sure criminal charges are going to be filed. And that could lead to bank mergers or banks being forced to close. Now, speaking of bad news on the financial sector, the Fed announced that they're going to keep interest rates near zero until 2023. They also said that they're going to be okay with higher than 2% inflation. Normally, if there's more than 2% inflation, the Fed will look to raise interest rates. But they said that they're going to keep rates artificially low, even if inflation does tick up above 2%. Now, they also stated that they are not interested in dropping rates into the negatives here in the United States. But I wouldn't be surprised if we saw negative rates here within the next 5 years. Thanks for watching, and if you like this content, make sure you subscribe to our YouTube channel and follow us on Facebook. See you next week.